Aurodeep Nandi, the India Economist Vice President at Nomura, joining us on the show. Hi, Aurodeep. Thanks for making time and speaking with us. Your first thoughts on the inclusion?
I mean, look, this has been going on every time for the past 10 years. At this time of the year, there used to be this speculation as to whether it'll get included or not, or markets would get hyped up based on that. And it's a little bit like, the Karan Arjun aa gaya kind of situation where it's finally come. So I think that puts a lot of speculation to rest. So the way it works is that this is going to be kicked in around a year or so later. So it's not something that will happen immediately. It'll also be phased in over a period of around 10 months. The total asset under management of under this index is around 230 billion or so. So we would expect that the inflow that would eventually come to India would be to the tune of around $23 billion. So obviously positive on that front. A lot of markets will be reacting to this, or may have already reacted to this, which would be sort of lower yields and with the rupee possibly facing upward pressure. But again, I mean, if the rupee appreciates too much, then what the RBI can always come in and soak it up and sort of increase its reserves. I think the question more is in terms of what this means from a medium term perspective. And I think the medium term perspective is that now it sort of sophisticates the source of funding for the government, which means one, that there is more scope for banks to lend to other routes than just buy government bonds. So obviously there should be an impact in terms of more credit growth. But it also means that now that you have more foreign investors that are going to own Indian bonds, it's not like they don't own now. Of course they do, but now you'll also have a new set of investors that want to enhance their or be part of a bond index discipline. The onus will be on the government to maintain good fiscal discipline, because that will be watched very closely. But overall, I think that this is sort of a good event for India, and I think it just reflects the importance of India's maturity as an economy.
Sure, Aurodeep, the boy who cried wolf is what we have been seeing for the last many years. Finally, it has happened. But now the speculation will turn towards when do we get added to the Bloomberg Barclays Index or the FTSE Index and the others as well. Do you think realistically that's sometime away, A? And secondly, with respect to, yields as well as rupee, what's your expectation of, have we seen the bulk of the move already today? Or do you think it might go below the mark of 7% as well?
So look, I mean, on the first thing, it depends on. Yes, there is an expectation that other indices might also be including India. It really depends on goes on index to index basis. I mean, for instance, if there's an index that only takes, say, sovereigns of a particular credit rating, say a AA credit rating, then obviously India with BBB minus will struggle to be part of that index. So again, it's sort of a wait and watch there. In terms of yields and markets, I mean, I won't venture into the extent, because this is going to be very, if you look at the past few weeks, markets have been yo-yoing between once reacting on bond inclusion concerns and the other time reacting to US yields, right? So I would suspect that people, and this time actually in the run-up to this decision, there was a lot of expectation that this might happen this time. So I would imagine that there was some positioning before. And obviously, in the near term, there could be some positive impact on yields. Looking forward, I mean, our view is that end of 2020, the end of this year, 2023, we have a view of around 6.5% on 10-year GSEC yield.
Okay, let's see when that 6.5% does come by, because of late we've got used to 7.25 kind of rates. But thank you, Aurodeep, for joining us and talking to us about this big announcement which happened overnight. But not only